Well, good morning, Southern Oregon, and welcome to the Real Estate Show. I'm Alice Lema here with my coworker, Pete Belcastro. We're both real estate brokers here in Southern Oregon with John L. Scott. And Pete, another beautiful weekend off and on here in Southern Oregon, and a lot of volatility in the market. What do you have to say about that?
Well, we always have about a really nice week of winter where the temperatures are beautiful, like we've seen this week, and that's lovely. And we still need a lot of moisture because we need lots of rain and snow still, which is not good. The market of real estate is volatile as heck. I mean, we're seeing interest rates have kind of trickled down a little bit. They've stabilized. We're seeing no inventory levels that we've never seen before, even though they're up a little bit from weekly. We follow them here. The market is just, it's a great time to sell a property. It's a great time to buy a property, Alice. Today, we're going to talk with Giles of Mutual of Omaha Mortgage about the interest rates and how we can buy these things and what we have to do to meet today's challenges, because it's really challenging for buyers to get to be able to get a successful close in a volatile market like this.
And it's not just the prices they're having to pay, it's the anxiety, and then it's all the stuff over the top. It's do you have to give up your rights of inspection? Do you give up your rights to request repairs? Do you have to chip in if there's a low appraisal? I mean, it's pretty brutal out there. I still maintain there's a tsunami of listings, a backlog of sellers, and they're coming on as fast as they can because they're trying to still catch this wave. Because I'm thinking come May, June, July, it's going to be a more normal market, but we'll see. We'll see if I'm right.
If I'm looking at $500,000 and above, I've got choice, and if I'm looking at $1 million and more, you've got great choices of property. But if you're looking at $250,000 to $350,000 to $400,000, Alice, you're really challenged. You've got lots of buyers. There are a lot of people pre-approved, and there's still just no inventory. Josephine County and Klamath County still this week have less than 100 frame-built listings in each county on the market in all price ranges. Jackson County is 255. It's up about 25 from last week, Alice. So we're still inventory poor throughout our region.
But we also have a lot of landlords that are dissolving their portfolios here in Oregon and moving their rentals to other states. They're taking whatever remote worker jobs they can. So we do have an interesting dilemma happening with that. And that's something we'll talk to Guy Giles about from Mutual of Omaha Mortgages, what the rates are for landlords and investment. That'll be interesting.
It's a great time to be an investor. It's a great time to do all these things. Alice, going to be a great show. We'll look forward to hearing from him.
So don't touch that dial. Pete Belcastro, Alice Lema. We'll be right back. Well, welcome back, folks, to the Real Estate Show. I'm Alice Lema here with my coworker, Pete Belcastro. We're both real estate brokers at John L. Scott here in Southern Oregon. And we're welcoming back our in-house lender, Guy Giles from Mutual of Omaha Mortgage. Welcome, Giles. Would you bring us up to speed on how things are going in the lending world?
Oh, man. Probably from the time you just hit tape till right now, they changed a little bit. We've had a really volatile market over the last, basically since the election, but the last few weeks have just been pretty brutal for the mortgage-backed securities up until Friday, and then they kind of turned back around. So we've just kind of hit a bottom on this thing as far as where they're trading. So we're just kind of bouncing up and down. So it's kind of a moment by moment job that I'm in right now. We're just, a lot of people are talking inflation at some point because they're thinking that we're kind of at the end of this COVID and we're going to be in a strong economy really quick. And when you're anticipating that, then you don't really want to invest in something that you're going to be stuck with that rate for the next 30 years because you're going to lose a lot of your investment just due to that inflation. On the other hand, this economy, we really haven't worked our way out of anything at this point. It's going to be a little bit of a road to get out of it. And I think the Fed recognizes that, and they think that anything that is going to hurt the housing market is going to be a drag on the economy in general, which is a true statement. So I do see before their next meeting really soon that they're probably going to jump in here and do something to to keep these rates down. So I don't know what that was. I apologize.
What do you think, Guy? When you were here a month ago, you said that you had someone earned a 2.20% interest rate from you and stuff. That was the lowest one you had seen. What since then in the volatility you talk about? What did you do last week? Tell us what range are we talking about for some of this stuff that gives us an idea especially for potential buyers about what they might expect kind of going forward as we see a little more inventory come on.
I think that right around the 3% mark, 3.1, 3.2 is probably, I mean, to answer your question, the mid twos is probably the lowest one that I locked at some point last week. It depends. Okay. It was a government loan that all the stars kind of aligned on a good day. I have locked people in the twos this week, but realistically, they're probably more around 3.1, 3.25 right now. Mm-hmm. Just kind of the low threes, and they're just bouncing up and down right there. I hate to get too specific without an APR, so I'll just say the low threes is really where your conventional financing is right now.
And that's what you're still seeing the majority of the applications coming to you, or are conventional loans? Is that right?
For the most part, I do see government kind of trying to gain some of their market share back. They lost it about 5 years ago, a lot of it to the more conventional loans, to Fannie Mae, Freddie Macs of the world, because of their mortgage insurance that they put on there for the life of the loan. So we have had a big shift over into more of the conforming loans, meaning the ones that are Fannie Mae and Freddie Mac and not your FHA government USDA loans. So, I do think that there will be a little bit of a shift back towards, some of the FHA. I know that there's been over $1 billion that just got allocated this last week by the FHFA to just be a stimulus for first-time home buyers, and a lot of that money will just kind of trickle down into the state governments for some. I mean, they really haven't gotten too deep as to where that money will be allocated. I mean, it could go. Who knows in this day and age? I mean, I don't think the president really has an idea.
So are you saying they're just going to give the states money and we don't know the trail after that?
Yeah, they never.
Is that what I'm hearing?
Yeah, it was a little bit vague as to exactly what they were going to do. I mean, if you would have seen the long-winded explanation on what happens to that money, anyway, we just couldn't go into all that. But I just said there's a big appetite to help out, especially first-time home buyers and people get into houses. And from the government side on this thing, there's a big push to make sure that rates stay low, because that would stifle everything, especially in the real estate market. But I can't think of a much better time to buy unless you bought 2 years ago. It's just I just don't see it letting up as far as just the inventory. We have a lot of buyers and not that many houses out there. So if you're on the fence about thinking about selling your house, I would give Alice or Pete a call like this week, because it's just a good time to sell or move up.
It's a good time to sell. It's such an interesting market to say that, because Alice, you've been predicting the rise of inventory for how long now?
Since the COVID started. Pretty much.
Yeah, so far that prediction in 1 year has gone the other way.
Well, now in my defense, the numbers of listings coming on right now are exactly the same as 2019. So
Okay.
right now
we probably didn't think that we'd be still sitting here wearing masks and dealing with a lot of the things that we're dealing with. Most people are a little bit more comfortable with other people going in their house with some of these, new treatments they got out there now. That's when it's really going to open up. And we just couldn't anticipate that until until it actually happens.
Well, and there's a lot of listings coming on, like just happened Friday, that haven't been reported yet. So I'm going to let Pete finish his thought. But
okay.
The tsunami of listings is here.
Last week in Jackson County, there were 228 frame-built homes, all price ranges on the market, 228. This week they were 255. So they've gone up a little bit, but considering there were 600 a year ago, or, the kind of thing, we're still below. And of that market, and Guy, you'll love this figure that just blows me away all the time. Of that 255 in Jackson County, 136 of those, so over half, are $500,000 and above. And so if you're looking in that price range up there, you've really got, you've got some more choice there. But below, in all three of our counties, the inventory is really squeezed. That's really changed the affordability index around here, because there were 68 closed sales last week in Jackson County, Alice, and the median price was almost $500,000.
Wow.
So we're at level right now on this affordability issue. The median price is $500,000, and that's what half of our inventory is. What in the world's going on? I don't even know how to describe what it is.
But see, there's a lot of price reductions right now. I think the crest of the high prices is about at the top. Maybe it's even started to come down a little bit. But I guess what I want to ask Guy Giles of Mutual of Omaha Mortgage is, because your payment is so low, should people really be focusing on the price they're paying, or really just, I can afford this much a month? And right now the interest rates are so low, it just automatically equates to a more expensive house.
Yeah, it's definitely the purchasing power, goes up quite a bit. We've actually even raised Fannie Mae and Freddie Mac raised the conforming loan limit up to right about $548,000, just a hair above that. So
what does that mean in
it means
layman
that
terms?
What they call the GSEs, or the government sponsored entities, these are the guys that own 90% of the loans out there. And that number's off, but I would say definitely it's close. Most of the loans out there that are originated these days are from Fannie Mae and Freddie Mac. They're, if you remember, the big guys that couldn't really keep their books in order back in 2009. So your tax dollars bailed them out. They're the guys that consequently get to write the rules for the rest of us. So anyway, a little bit of a sore subject from back then, but basically, yeah, if with these rates, it's amazing. I did some math, and I don't have it in front of me, about a week ago, with two different rates, purchasing a house around $350,000. And with today's rates, that house would cost you about $500,000 when it's all said and done. After you've paid your interest, don't take that a bad way, because your house will appreciate and compound over the years. So it'll be worth a whole lot more than that, 30. But just with the rates where they were in the 80s, it was $1.6 million for that same house. Granted, the rates were a ton higher, but that's a big purchasing power difference. That's paying over three times as much for the exact same house because of where rates are today. So, we're going to look back one way or another, and it's just still a really good bargain. We're going to look back at where these rates are today. And even if you have to pay a little bit more for a house, go in, just like Alice said, with your eyes open. Hey, this is the payment that I'm comfortable with. Let one of us work with you to see exactly where that's going to get you. And if the numbers work, buy a house. It's a good time. These rates.
What is a $500,000 loan, 20% down and 3% kind of interest? What am I looking at, Guy, in terms of a payment each month? Because that's one of the biggest questions buyers have. Well, what's my payment when we're out showing properties? I know Alice, you think the same thing. I try to figure it out in my head, but what would some of those be?
Well, so just the payment, you say 20% down on a $500,000 house, that would be a $400,000 loan. If we did 3%, you'd be at about $1,686. Don't get too excited with that payment yet, because you would still have your taxes and insurance on top of that. And that's one thing that I really do like to drill into everybody that walks through my door. If you buy a house in Central Point in the city, your taxes are going to be a little bit different than if you got one Eagle Point out on some EFU land. So do be mindful of the taxes. If you figured in about $55 for insurance a month, might be a little low, might be a little high, depending on where you go. And you figure another $300, that's probably gonna be a little bit more than that, say $350 for taxes. You're at about, $2,091.
Yeah, so right $2,000 on a $500,000 with 20% down. So the 20% down is hard to come up with for so many people, but they could afford that $2,000 a month payment perhaps, but it's the down payment that is saving that around, which is difficult for many.
And that's why it's good to get in and talk early about these kinds of things. If there's anything we have to help you with your credit, because that mortgage insurance, I know we're kind of coming to the end of the segment, so I don't want to break into something that I can't finish, but we do want to be really mindful of, where your credit score is. We have some really good rates on mortgage insurance at this point. I can shop around to a lot of different places, and I've had it as low as, $20, $30, $40 if you have a decent down payment. I'm not saying at 3% down, but we can look at that too, and it's not as cost prohibitive as it was just a couple of years ago for mortgage insurance with a decent credit.
Good to know.
So, folks, we have a break coming up. It's a very educational conversation with Guy Giles, Mutual of Omaha Mortgage. So do not touch that dial. We have more interesting house information coming for Southern Oregon right after these messages. Do not go away. Well, welcome back, Southern Oregon, to the Real Estate Show. I'm Alice Lema here with Pete Belcastro. We're both real estate brokers at John L. Scott here in Southern Oregon. And Guy Giles, of Mutual Omaha Mortgage, is here with us today. He's one of our sponsors. And Pete was just asking him some questions about the current situation with payments and how that equates to actually buying a more expensive house. So Pete, you were talking about how lately the average cost of a home in Jackson County had gone up upwards of $500,000. Do you think that's something that's going to keep going?
Well, if you're talking to me, if it keeps going like this, then people are going to be forced out, and we're going to change our entire communities if that median price continues to climb like that, Alice. I mean, that's really crazy. And again, what are we replacing it with? Where are people going? I know there's going to be new listings coming on, but I'm still telling everyone there's no place for these people to go. And unless you're leaving our community and going some other place, or if you think, that's a whole different story. But if you're trying to find a place to go in your own community, what I'm seeing, and I don't know what Guy is, you loan also, we're having dominoes. It's like one after another. People are contingent upon this or contingent upon this and contingent upon this because there's no place for the original seller to go. And so everybody's backed up. I'm seeing occupy after closing, and I've never seen in the 13 years of doing this. So the market is, as Guy says, it's volatile where he's at in that age. It's volatile where we are in our end too.
Yeah, and the fires, certainly didn't help, losing that 3,000 plus home sites, and the rebuilding is going to take time. I was down in Phoenix yesterday looking over some of the cleanup operation, and it's still pretty slow going. And if you're interested in buying one of those lots, in some cases you have to take it unclean and pay for it yourself. Because the existing owners just can't get it done quick enough.
Well, FEMA's they probably got FEMA doing that, and FEMA's can only get so many done, and that's true. But there's just a real problem here of where people go, and I think that again, buyers and sellers and lenders and everyone need to be aware of this because we're not. I mean, it's difficult enough to close on time, but now we're seeing. I mean, I've had people say, I can't get to the next house that I bought because that person is now delayed getting to their house. And so the whole chain comes back down. Loans are having to be redone, and it's just clogging up the mess. I mean, I even have cash offers into escrow, and they can't even touch them for 4 to 6 weeks because they're backed up with title searches and things like this. So I mean, it's pretty volatile, and people get very upset at that and emotional because the dominoes don't fall the way they want. We got to be aware there's a lot of dominoes out there that we're all going to have to maneuver somehow to get through.
Yeah, and we have to warn people in escrow as it gets close to the end, just to be careful about booking those trucks and booking your help, and things are outside our control. We still have our emergency order for COVID. And that causes extra paperwork for underwriters and things like that. And sometimes at the last minute, it's going to be 2 or 3 days later.
I've got a question for Guy, though. I've run into this situation. A lot of people, first-time home buyers especially, who don't have a lot of cash. They have to turn to an FHA or a USDA loan to try to be able to get enough, oomph and money to make an offer that's going to be accepted. And I've come across several times now where the sellers will not accept FHA or USDA or VA loans. They say, I only will take cash or conventional without even looking whether or not the house would pass another inspection, from FHA or USDA. So what do we tell people about that? Because I've not experienced that until now, that sellers are saying, I won't accept those. I only will do this type of loan. What do you think of that?
Well, it's probably the same thing as, like being at the bar at 145, if there's not a lot out there, then you get to, just kind of make your own rules. And that's kind of what they're doing right now. There's not that many houses and there's a ton of buyers. So I think for the most part, they just feel like if they find a little piece of peeling paint on the back of this building, then it might not go FHA. And now we're going to be into some kind of a longer transaction trying to get it done. I don't know where the stigma is. If it's a clean house, I just don't have problems. I do a ton of VA loans all the time. They actually are the only ones that have turn times when you have to have that VA appraisal back. So, those VA appraisals are actually coming back fairly quickly as far as that goes. I'm not really having a lot of trouble with turn times right now on conventional stuff either, to be honest. We're getting a lot of these automated values at this point. But really at the end of the day, it's just all about, if they think that they can make it an easier transaction or a faster one by not having to deal with some of the potential problems, waiting for, any kind of a government program. But we're direct lenders and we do underwrite these things, right away. I've been out to houses and had real estate agents say, hey, look, do you think this thing will go FHA? And, last week I was out there actually with John L. Scott gal looking at a property, just see if she could mark that thing FHA. And it's really not as bad as you think. And unfortunately, you end up losing a lot of the buyer pool if you exclude those from them. And, sadly, I've seen it the opposite way just as much with something that's never going to go FHA or a government loan in a million years. And they just mark down FHA, USDA, borrow from your uncle, list everything. And that's actually been kind of a sad thing too, when those are showing up on people's listings and they can't buy them anyway.
Okay, here's another thing that's maybe come up that I'll get you to think about this. We have such competition for properties and rural properties, especially where there's just simply no housing. And something comes on the market, and I've had this experience where all of a sudden you get several offers came in way overpriced. I mean, you're talking, a small $20,000, $30,000 over the price, over the listing price. And my question was afterwards, when we thought about this, was are buyers coming in deliberately high, and then say if the appraisal doesn't come in to match that, I can come back to the seller and say, well, you got to lower your price because it doesn't match the appraisal. Is that what in some of these
realtors are getting wise to this at this point? They're basically saying, if this house doesn't appraise, we want you to be able to prove that you have the ability to pay for the difference because we're going to take your offer. That's what I'm actually seeing more than not at this point.
And I think in the beginning of this acceleration, which was partly due to the COVID, we did see some buyers trying to do that. They'd come in high and then try to hit the seller up. But again, the competition was so stiff and the inventory so low that now what we see over the last 4 weeks is buyers have deep pockets in their group of family, friends, whatever, just because they are going to have to overpay and then they're not going to be able to get it from the seller. So if you are out there buying right now, especially in the lower price ranges, you need to have some deep pockets, either with yourself or somebody close to you, just in case. But, I had a situation in Central Point and the appraisal actually came in high. So like Guy and Pete keep saying, the volatility is out there. As more inventory comes on the market, I think it will lessen that ferocity. But boy, if you're fighting for something under 300 or 400, you better have some more money on the side.
Yeah, and the other thing to keep in mind is these appraisers are looking backward. 5 pending sales that are going on right now. They have to look at ones that are closed at the day that they're doing that appraisal. So, it is kind of weird. I mean, where do you guys think we're going to hit this year? I was thinking about probably between 7 and 9% appreciation as far as the houses go. And it might just be way beyond that when it's all said and done. But for last year, if you pay $5,000, $10,000 over for a house, it's $300,000. You're probably only 2, 3, 5 months before that got caught up. So maybe it's not the end of the world if it's the right house and you have the money to spare. I'm not a proponent of people going in over their heads ever in a million years, but I'm also not a proponent of 4 people being in a 1-bedroom place at their sister's house. That was my 11 o'clock meeting this morning. Great people just doing what they can to survive until they can find a house. So it's tough.
Here's another thing happening a lot, especially with out of town buyers, but not necessarily that way, is there's just once something comes up, they put the offers in immediately, before everyone's sight unseen. And boy, I'm seeing that so much for the first time also recently, because again, and you talk to the other agents and talk to some of your buyers, and they're saying they're just so desperate to find something, they'll take literally anything that comes open. And boy, which brings up, I guess, how acute our housing shortage is here, especially in affordable housing really, really is right now. It's rearing its head, something like maybe we've talked about for years, but we're really going to see it now really expose itself a lot more because there's simply nothing out there. I mean, like in all of Jackson County, I mean, we're talking Medford, Ashland, Central Point, you've got it under half the market is below $500,000. And that really, above that, it eliminates so many buyers. So we really got some issues out there with housing. And I think we're going to see the acuteness of it, unless you guys are right, unless Alice is right. And we see, like, instead of only increasing by 25 listings this last week, we need to increase by hundreds to get anywhere near where we were. We used to have 1,000. We used to have 1,000 listings in Jackson County normally. Well,
and unless everybody's leaving town, we probably will get a lot of listings, especially as soon as they loosen things up. But still, we don't have enough houses for the people that are here right now, let alone the ones that are coming. So I think it's going to be a tough market. And that's why it's just so good, or so wise, to have a good real estate agent that does this stuff full time, that knows, like one of you guys. The worst thing to do would be to lose a house of $1,000 or something. And, the real estate agent isn't trying to make an extra $15 on commission by talking you up. You guys see this thing day to day and see offers get rejected and accepted. And these guys just really have to lean on you as far as what you're going to offer and how you're going to get that thing accepted.
Well, and that's why if you have a lifeline, so to speak, of some extra cash, either in your own bank account or your parents or an uncle or aunt or somebody who can jump in and help. We're seeing a lot of partnerships too, people going into contract together so that they can have a stronger presence for their pre-approval. But
Alice,
I do.
Alice, do you go after multiple offers? Will you go with that whole process with your buyers, or do you kind of slide off from those kind of things?
No, my buyers win a lot of the multiple offers, but especially if it's under like 325 in any county, except Klamath, you can do pretty well, but it's pretty bloody, and you have to be prepared. You have to be prepared to lose. You have to be prepared to give up inspections and things like that. So they're very intense, but we do win a lot of the battles, and then everybody's happy. I just don't think it's going to be like that this summer. And some of the market, I'm predicting, will slow down to a normal 6 to 9% for both Jackson and Josephine County. And, if there's going to be any acceleration, it's probably going to be in Klamath. And I guess we have a break coming up. So do not touch that dial. Pete Belcastro, Alice Lema will be right back with Guy Giles from Mutual of Omaha Mortgage. Welcome back to the Real Estate Show, folks. I'm Alice Lema here with Pete Belcastro. We're both brokers at John L. Scott here in Southern Oregon, and we're having a great conversation with our in-house lender, Guy Giles, Mutual of Omaha Mortgage. And right before the break, Pete, we were just talking about how hard it is to win multiple offers. But as Guy was saying, it's going to be worth it in a year or so, depending on the appreciation. What do you think the appreciation is going to be in 2021?
For me, if it's double digits, I think that's right now it's in the double digit range these first 2 months. So if it continues that way all year long, obviously it's going to be there. You don't want it to be there. We can't sustain that. And what it does is that just makes affordability for the bottom part of the market simply unattainable to get home ownership. And that's where young people start their homes and their careers and they're creating the wealth is with home ownership. And if they're forced out, where are they going to go rent? There's no places to rent. Okay, speaking of rentals, let's ask Guy this question.
Yeah, let's talk about that.
About an investment property on a 1, 2, 3, or 4 unit apartment. Is that even out there? What are their rates? Is there any incentives? Because as Alice says, a lot of her investors are selling and getting out of it.
Well, and they're going to other states that have better tax.
You would think that that there are some people that are landlords are thinking about not renting anymore. I mean, if you can't collect rent, that could be a difficult place.
Well, but what they're doing is they're leaving
more
Oregon.
Inventory.
Yeah.
Hopefully there'll be a little bit more inventory coming up from some of those people. The rates you're gonna assume a four unit's going to be a whole lot more expensive than a 1 unit or a 2 unit, but you're probably talking in the high threes at that point. I have not priced one out for a few weeks on the investment, but if you can find one that's a decent price, it's probably not a bad idea to do that at all. I have one of my favorite people I'm working with right now. Her name's Janet. I won't say her last name on the radio, but she's renting for a couple $1,000s a month. Just got her offer accepted on a house, and her payment's going to be a ton lower than what she was renting at. And now she's in her own house. So, they're a little bit higher, but I think that if you have a decent down payment, you're going to want at least 25% down if you're thinking about buying an investment property, just the way they're pricing these out right now. So, 30% is even a little bit better.
Well, but see, I would disagree with that if you can stand living with your tenants. And I don't mean that in a bad way. It's just there's issues about if you're the landlord and they know that. But I've got one investor who's got a triplex and he's living in one, collecting rent from the others. And not only is it all paid for, but he's getting $1,000 a month profit. Wow. And living for free. So, that's a great setup. And then it was only like a 5% down, I guess, because it was living there. But that's the double-edged sword.
Well, if you do something like that, then it's really not bad at all. I guess I was just thinking of the overall, you don't have to make your rent payment for a little while thing. But no, in that kind of position, it's great.
What about people buying, second homes? That was a big thing when the first wave that hit us after COVID hit last year was a lot of people buying second homes up here. What are the rates for them? Is it comparable to what you're talking about with multi-units or?
No, it's actually, you pretty much get the owner occupied rate for a second home. The only caveat to that is we can go as little on a conventional loan is 3% down. And I'm not talking home ready just for anybody, but on that, you do need 10% down to buy a second home, but you will get the same rates that you would on a primary residence for that.
That's awesome.
Yeah.
10% down and you get the same rate as I would get as my owner occupied. Mm-hmm. So I could still get that second home then for 3% or 2.9%, like you were talking about then.
Yes. Yeah. Wow. You'll get the same rate.
Can a local person who lives like in Jackson County buy a second home in Josephine County and still have that work, or do you have to be really far away?
Well, as a rule, it's probably 35 miles ish or so. I mean, it depends if it makes sense. I had a kind of a famous hand doctor here that I did loan for years ago, and she had a horse right out in the Applegate, and she'd go spend the weekends there. And that made sense for a second home, or if you're buying something up at, near Lake of the Woods. someplace like that, that just kind of makes sense. I mean, do they want you to have a second home in Rogue River if you live in Medford or Central Point? Probably not. It just really has to make sense. It's like, why would you go hang out downtown Grants Pass in your second home if you had your first home in Medford? Not that one's better or the other, go the same way the other way, but it just really has to make sense. And if it does, you could do it. If you got a place on the river over in Grants Pass, I think there could be an argument made for that all day long.
Wow.
They just don't want people collecting a whole bunch of, houses that with the owner occupied rates if they really don't intend to do that.
Yeah, and the low down payments. Yeah, that's for owner occupied.
And there are a lot of rule changes now where you can VBRO out your second home and you can make, a lot of your money back on.
Oh, they let you do that? They let you Airbnb your second home?
They do now. And it was 200. I don't remember exactly how many days. It's been a little while since I dealt with it, but yes, you are able to do that on your second homes now. And it's right in the guidelines.
So investors, listen up. Guy Giles just said you could buy a second home for 3 to 5% down and Airbnb it. Bam. I'm
not qualifying you on that income. You still have to qualify for both, but it is actually a really good thing to do. I've been thinking about that myself.
Well, I'll tell you, that's probably one of the better investments a person can make right now in certain locations. That makes a lot of sense. One of the areas talking about second homes that we really don't have. There are second homes in Jackson and Josephine counties in different areas, but I'm telling you, one of the areas that I've learned where there are tons of second homes is in northern Klamath, southern Deschutes County, Lapine, Crescent, Gilchrist, out in the woods, Crescent Lake, Odell Lake. My goodness, there are tons of places up there. And most of those, I would say most of those are second homes, and they're beautiful. Some nice ones.
You're super familiar with that area. So you got Alice covering all the investment stuff and you covering that Klamath area. You grew up there and it's pretty.
I want the fun. I want the fun stuff. Is what I like. beautiful drives in the water. By the way, I know we're almost out of time here. We haven't talked about much, but the water situation here is really critical. It looks like we're going to have just a really bad water year coming up, and people need to be aware of that. The people, as you sell properties to or look at water and water rights and wells and things, that's going to be a whole subject, Alice and Guy, as we go through. Lenders are going to have to be involved with, because we're going to have a lot of situations. It's going to be really an interesting year coming up just in water, because unless we get some snow and some rain, and we need a lot of it.
And this is where if you have irrigation rights out of one of the waterways, that you find out when those rights were, right, Pete, when those rights were first granted to that address so that you keep them.
Well, you certainly have that in certain areas, but I mean, look, Immigrant Lake, if Immigrant Lake doesn't fill, there's not going to be water for the Talon Irrigation District, Medford Irrigation District, all of the Rogue Valley, the Klamath Basin. The tribes have already leveled a suit to not lower Upper Klamath Lake beyond a certain level. So, water rights, again, and the issue of water in the West is going to be a foremost thing, and it affects real estate. It affects rural properties, who buys them, where they go. We may experience that in 2021. I hope not, but we better be prepared for that.
Yeah, well, and we'll definitely have to talk more about that on our next show. So we're just wrapping up, folks. We appreciate you listening to us today at the Real Estate Show. Alice Lema and Pete Belcastro here visiting with Guy Giles, Mutual of Omaha Mortgage. We're brought to you by John L. Scott here in Southern Oregon, the Rogue Valley Association Realtors, and Guy Giles, Mutual of Omaha Mortgage. So have a beautiful Southern Oregon weekend. We'll see you next time. Bye, folks.
Thanks, you guys.
Bye.